Welcome to the fourth episode of the Monthly Dirtcast. I'm Jared Dillian, editor and publisher of the Daily Dirt Nap, a financial newsletter for investment professionals. We've had a few new developments here at the Dirt Nap since we last spoke. First of all, I've been invited to be an editorial columnist at Bloomberg View. That's a pretty big deal for me. It's a huge honor. Also, I just got back from a few days in Vancouver, where I was an economic tourist, got to check out the housing market, and have a few stories to tell from that. Maybe we'll get into that today. I'll give you a sneak preview. Vancouver is the second biggest bull market I have ever seen. We've got a great guest here today, though he may not seem like a great guest. I have here with me Eric Hatcher from Wilmington, North Carolina, who actually works as an emergency planner for a public utility. Now that may not sound very exciting, and it certainly sounds like it has nothing to do with finance. But there's a great story here. Eric Hatcher is probably the most successful individual investor I have ever known. And we're talking about a guy of pretty modest means. I don't think, and you can tell me later if I'm wrong, I don't think he's ever made six figures in a single year. And Eric Hatcher is a millionaire. So we're going to talk about how he did it, and we're going to talk about the advice that individual investors get nowadays and whether it's any good or not. Eric, welcome to the show.
Thanks, Jared.
Now, in the interest of full disclosure, you and I are friends, and we've known each other for a long time.
Friends is a strong word.
Yeah. So we were in the Coast Guard together, working in intelligence at the Pacific area headquarters for the Coast Guard. Now, we can't talk about what we did there, but let's just go through your Coast Guard career, when you enlisted, kind of stop by stop what you did, and I think people would like to know.
Okay, thanks, Jared. I graduated from high school. I'm from Kansas City, and when I was 18 years old, I was not a very good student. I wasn't particularly self-disciplined, and I was kind of lazy, and the thought of going to college at that time just did not appeal to me at all. I was going to probably have to work really hard. I was going to have to probably pay for most of it myself, and I just didn't really find that appealing. At the same time, when I grew up, you didn't sit home and play in your mom and dad's basement. You know, you were expected to basically get out of the house. And so for me, the military was...
Yeah, so 18, you're an adult. You're out of the house. Like, you got to go do something.
So I joined the Coast Guard when I was 18 years old, and looked at the other branches of service, and I didn't really find any of them appealing. They were all great. I just didn't see... at the time, I had no intention of staying in the military other than for my initial tour, and then getting out and seeing what I'd learned and what I could apply that to. And so I joined the Coast Guard and went to boot camp, and after that, a boy from Kansas City found himself stationed in Southern California on a patrol boat. And
station vacation.
Well, yeah, it was. The cutter I was on was actually the busiest cutter at the time in the Coast Guard. We did a lot of search and rescue off of Southern California, and I wasn't there very long. I decided I wanted to be a guy that was in charge of things. You know, I had a very scary experience early in my career, and the guy that was in charge of it, I found it rather appealing that he was telling people more senior than him what to do, and it was a scary experience, and I just kind of said, well, you know, if I'm going to hell, I want to be the one driving the bus. So in order to do that, you become the bosun's mate. You become the guy that's driving the boat and the guy that's in charge. So I went to a school to learn how to drive boats, and they stuck me into a great environment to perfect that skill.
So wait a minute. So that was that the Cape Disappointment School, the motor lifeboat school?
Well, after I went to Yorktown to become a bosun's mate, they sent me to Coos Bay.
So you went to A school for bosun. You actually went to a bosun mate A school,
right? And that's where they teach you to learn how to drive single screw, twin screw boats, and navigate, and aids to navigation, and those types of things.
What? This is a discussion that nobody's going to understand. But you know, a huge percentage of bosun mates are strikers, right? Like, do they even have an A school anymore?
It's gone on and off. all throughout my career. At times, it's just there's a big demand for them in the Coast Guard, that particular rate, and sometimes they have a shortage and they have to have a school for it, and other times they've got a glut and they'll close down the school. And at the time, a lot of people made it by striking the rate and not going to a formal school for that. Well, a guy on the ship happened to take a test and came out number 2 on that test, and the cutoff was 0. That means they were not going to make any.
Yeah.
And I said, well, what chance do I have of only been in the Coast Guard for 9 months? Well, this guy had been in for 2 years. So I said, well, at that time, I'm going to go to school. Well, I went to school, and, this was back in the day, so they weren't really, they didn't have their finger on the pulse of the workforce very well. So right after I graduated school and became a petty officer, they stopped making bosun mates, period, for a time. So
you were the last one in.
I was kind of like the last one in.
Okay, so let's speed it up. So we'll stop by stop. Where did you go and what tours did you have?
I went to Coos Bay, Oregon, and I was a motor lifeboat coxswain. I drove boats out in the surf and the type that are able of rolling over and self-righting and big waves. And it was a great place to learn how to drive those types of boats, and it really set the foundation for a lot of my later success. But it was 3.5 years of scared to death, constant stress, because you went out into an environment and, there were a lot of serious injuries and things that could happen that could end your life as well as your career, certainly. So after that, 3.5 years was up. I went down to Alameda, California, where I was a mobile law enforcement instructor, and that was a very appealing job to a single guy because I got to travel to Alaska, Hawaii.
Yeah, you were on the training team, right? Is that
I was
what it
on the training team, and we traveled.
So just for everybody's benefit, the training team is you go around and teach other units how to do law enforcement. So
yeah, that was that job, and you get a lot of schools with Secret Service and FBI and Customs and those types of agencies to kind of teach you what you're doing when you're out there, and then you just take that on.
So at this point in your career, you're a second-class petty officer?
I'm a second class.
So you're a second-class petty officer. You're an expert in driving boats, and you're an expert in law enforcement.
Yes.
Pretty much. So where'd you go next?
I met my future wife out there, but she was on the East Coast, and she was about to graduate from college, and I had been in the Coast Guard for some time at that point. And so we decided to try to get closer to each other. So I went to another station in New Jersey, and that station no longer exists, but it was between Barnegat Light and Atlantic City, New Jersey. So that was a school that a station that by that time I had 9 years in the Coast Guard, and I was really debating whether I wanted to stay in or get out. So I started going to night school and started pursuing a college education at that point, and decided I still could pursue the education that I wanted. By the time I was 27 years old, I recognized the value of that, but still enjoyed what I was doing in the Coast Guard. After that, I went to Puerto Rico on another patrol boat. After that, Key West, Florida on a patrol boat. After that, Long Island, New York. And then after that was back to the West Coast where we were assigned to go.
Okay, so we're working together, and you were a warrant officer.
I was a chief warrant officer.
So explain to everybody what a warrant officer is.
A warrant officer is a commissioned officer, but at that point, what you have done is excelled in your enlisted career, and you've demonstrated that you can communicate and you can write. You haven't gone to an academy. You don't necessarily have a 4-year degree, but you're considered to be a technical expert. And so the Coast Guard and some of the other services take chief warrant officers, and they don't really manage people, they manage things, they manage programs. And so that's what I was out there, the Pacific Area Intelligence job. I was managing a program, or involved with the program.
So after you were warrant officer, you made warrant to lieutenant, and so you got promoted from being a warrant officer directly to a lieutenant. Now, I hear that's really hard to do.
Yeah, it's one of those things that, you've been an officer for 3 or 4 years, you're in the zone for promotion as a warrant officer, and you say, well, at this point, I have a college degree now, and I say, I want to be a regular line officer, a regular lieutenant, and that's an 03, captain in the other services, but And the Coast Guard will fail as an organization unless they make me a lieutenant. And then the Coast Guard has to look at your record, look at everything that you've done, look at your experience, and get recommendations of a number of folks. And they have to come to the same conclusion that they as an organization will fail unless they make you a lieutenant. So that's how I made lieutenant.
But you told me that on that promotion board, you were the only one that made lieutenant out of all the warrant officers in the Coast Guard that applied. Is that correct?
No, that is not correct. There were 3 others.
But, I mean, the odds are very small.
The odds are small because that was only 3 that particular year. So
okay. So, I mean, but you had, for anyone who enlists in the Coast Guard, and, by your own admission, you were not a great student in high school, you had an exceptional Coast Guard career. I mean, I would say absolutely exceptional.
Yeah, I loved it. I loved what I did. It was a lot of fun. And, the Coast Guard really does a good job of training its people to do the job. It's certainly up to the individual to take what they've learned and apply it. But work ethic and foresight and, all that stuff is very important. Even the tools that my parents gave me. So, I mean, I was a good student once I started taking classes.
I think a lot of people are like that.
Yeah.
So when we worked together in Intel, now that was a fun job. We had a lot of fun, and I think it was because we were trying to fart on each other all the time.
I remember it a little differently. I think it was mostly you and me trying not to be repulsed. But.
Well. Olay. We had a good time in that office. It was also around it was around the same time that movie Office Space came out. With the TPS reports and stuff. So there was a lot of similarities to that. I spent most of my time doing intramural sports. I think rather than working, I spent a lot of time playing softball. 51-4 record over 3 years, 3 championships.
Yeah, that was for you young Turks. I was mostly concerned about lunch.
So this is 1999, and we're in the San Francisco Bay Area, and the .com bubble is going bananas, and everybody is interested in investing, right? So I used to sit next to you, and we used to pull up Yahoo Finance every day, and I had a couple of mutual funds, and you had a lot more money in mutual funds, but people were day trading in that office, or at least trying to. I mean, that's what was going on at the time.
Well, I missed that. I mean, certainly I was invested in mutual funds and individual stocks, but I only invested in things that I knew, and I didn't. Obviously, mutual funds I was in were invested in those types of things, but I didn't necessarily understand a lot of what was going on. So day trading, I never took an interest in that myself.
Yeah, I think our boss was trying that, though. I think,
I believe you're right.
Yeah, I think he was doing that. So, but I remember you bought a car. You bought an old Volkswagen Bug with the dividends you received on something. Is that right?
Yeah. I was always compartmentalizing my money. And when we went out to the West Coast, I needed a second car. We had 2 kids by that time, and my wife had the new station wagon. And I just needed something that was going to get me from, 3-4 miles away to work. So I wasn't really looking for anything that was a luxury automobile. I was looking for as cheap as I could get it, but I always had an affinity for old Volkswagens.
But didn't you have like an account that had some dividends dumping into it for a while, and it was just like found money? Is that what happened?
Yeah, it might have been Johnson & Johnson stock.
Yeah, I think so.
Yeah. I had that for a long time.
But that's like the magic of Eric Hatcher, though. I mean, you have so much money saved up in all different places. Like it just a stock that you had invested in years ago had spit out enough money that you can just buy a car. And I mean, you saved a lot of money. We were both pretty frugal. But tell me, when you first got in the Coast Guard, you've been saving since 1990. So what was that like? What was your weekly or monthly budget? How much were you saving? Were you saving 10%, 30%, 50%? Like, what did that look like?
Well, actually, for me, I started in 1980. In 1990 is kind of a benchmark because that's when I was married. But I always saved more than I spent. That's the key. Everybody hears that, but I always lived below my means. I always tried to pay cash as I went ahead. I always I had to look at the end of the month how much money I had left over, and it just always felt like I needed to be saving money, not spending money, because I'd seen enough examples of people that just live paycheck to paycheck. So even though certainly those paychecks were pretty meager, I just lived below my means and didn't feel the need to have new cars and new stereo systems and things like that. So pretty much everything I did in those early years, and still kind of do to today, is to just buy something that's good enough to do what I needed to do. I don't want people pointing and laughing as I drive down the road, but I don't need to have a nice luxury car or any of that stuff.
So, but in the early days, was it just a bank account that you were saving in?
I had CDs, and you know, this is probably what had a profound effect on me early. The first CD I ever opened was a $1,000 CD, and Jimmy Carter was president. I think this was 1979, and the interest rate on that CD was 14%. And obviously, it's 14% because there's a heck of a lot of inflation going on. But nonetheless, at the end of that 1 year, when you look and see how much you've earned for basically just letting somebody else hold your money for a while, you know, I just kept kind of like rolling that over. So I would say I still have that $1,000 CD. And of course, certain jobs like that training team job in California, I was doing a lot of travel. So I was not spending a lot of my money. And it was just always, even before I got married, mostly CDs, just saving money, sticking them in CDs. And of course, they were earning a lot more than they have the last 10 years. But, you know, I could always see a positive result when it came time to renew or roll over that CD. So that was the first vehicle, and even to this day, I still have CDs. They're just compartmentalized for a particular purpose. And so
I just want to interject here about interest rates and how you, in a high interest rate environment, you invested in a CD, you invested $1,000 and you got $140 back, and you said, "This is magic. Like, I'm hooked," you know. And think about what that means for today, right? Like, now interest rates are basically zero.
Yeah,
so that's not, and you know, somebody who, what's the point of saving in a CD, you know, if you're not making it, if there's no interest. So
right, and I would try to explain to my daughters all the things that I did when I was 18, 22 years old, and I can't tell them those things.
No, it doesn't make any sense.
No, absolutely not.
So enough of the editorial. So let's talk about, when did you graduate from the bank and CDs to other stuff, mutual funds or stocks? I mean, were you interested in stocks? Like, what was your next step in investing?
It was mutual funds. Individual stocks came later, but it was mutual funds. It was, you know, finance investing. It was kind of always an interest of mine. It wasn't really a hobby.
So were you reading a lot of books?
I was reading Money Magazine back in the 80s.
That was, back in the 80s and 90s, Money Magazine.
Money Magazine, yep. Kiplinger, all those, Fortune. There were some others out there I forgot, but I was just reading those things cover to cover. Many things I didn't understand. Many things today I don't understand, and I don't touch it. But what I understood was mutual funds. And when they talked about, you know, this particular mutual fund has earned this percent over, you know, X amount of time, you know, that was very appealing to me. I understood individual stocks, but it was better to own 100 stocks or 1,000 stocks, you know, because I could see that you weren't so reliant upon one particular stock.
Oh, you had diversification benefits.
Right. So I had, you know, there were international, when we first started out, my wife and I investing, it was, you know, an international growth, Vanguard, or an Ultra. It was American Century or 20th Century at the time out of Kansas City. So we were always looking for recommendations that came from those types of magazines. And then you do a little bit of research and find out, well, this is pretty good, you know. But so even back then, you were looking at pretty good rates of return on those mutual funds, as long as you held them and as long as you knew what you were going to use that money for.
So you mentioned Vanguard, and you also mentioned American Century. So it sounds like you had a mixture of index funds, passively managed funds, and actively managed funds. It sounds like you had a little bit of both.
Yeah, and then, well, for Vanguard, we had the S&P Index 500. There was a There was a international growth fund, I think, and there was one other, but that escapes me. And so we did have a couple in American Century.
Now, I assume you chose American Century because you're from Kansas, so you know the firm.
Absolutely.
Yeah.
Absolutely.
So now, did you pay any attention to the fees? Like, did you look at the expense ratios? Was that really a concern, or did you just...
I was ignorant of the fees. No, I didn't really look at it. I was looking, more at that advertised rate of return over time. And the fees, I just...
Well, it doesn't seem to have hurt you at all. Let's put it that way. Like,
well,
if you invested in high fee funds, you wouldn't notice it nowadays.
No, and that was something that, when you would read those articles, they would say the fees are not too bad for this particular fund. So that was about the limit of what I was paying attention to there.
Did you ever, along the way, take any money out of the mutual funds to pay for something? I think you've taken a little bit out recently to pay for your kids' college and stuff like that. But along the way, like, how much did you take out?
We took out enough to put 30% down on a house. I mean, there was we had 4 mutual funds with American Century. 2 of those they were traditional IRAs, and then the Roth IRAs came along, and we converted them to Roth IRAs. But 2 of them were always designed to be a future house, down payment. And so one time I was in Haiti, and my wife calls me and says, I found my dream home, and I really want this. And she sent me pictures, and I said, it looks really nice to me. I'm in Haiti. I can't do anything. So when I got to Guantanamo, called the mutual fund company, and I think I had to have somebody actually execute the transaction for me. But we sold a couple of the larger holding mutual funds to put down about 30% on a house.
So how old were you? That was the first house you bought, and you were...
Yeah, the first house I bought, I was 42 years
Yeah,
of
it's
age.
much later than a lot of people. But that's a lot of that has to do with because you were in the Coast Guard and traveling around.
Absolutely.
And stuff. Yeah. Okay. So let's go back to, we're working together, and it's the year 2000. And now you had, I believe, all stock mutual funds, right? You didn't have any bond mutual funds back then.
100% U.S. equities. One kind of matched the NASDAQ, and the others.
I remember having this conversation with you. I was telling you at the time that you should get into bonds, and you didn't want to do it. So then we had a terrible bear market from 2000 to 2003. The S&P 500 was down 50%. The NASDAQ was down about 80%. And what did you do during that bear market? Did you do anything? Did you invest more? What did you do?
I bought I-bonds.
Inflation bonds.
A lot of
TIPS.
I-bonds. Well, they were just called I-bonds to me, but what I liked about the I-bonds was the tax-free for education. And so that was my investment vehicle for being able to pay for my kids' college. I was going to pay the face value of the bond up front, but it was going to be tax-free.
But
it's used for certain things.
In 2000, what was the total value of your portfolio? And in 2003, what was the total value? How much of a drawdown did you take?
I could answer that with some looking at my figures, but
just off the top of your head,
maybe 25%.
20. That's a pretty big drawdown.
Yeah, I mean, I've had some years that it went down a lot. I was invested on Black Monday, 1987, where I lost quite a bit of my porportfolio at that time. So I wasn't selling it.
So 25% is, let's say you had 25% is if you had 500,000, it goes down 25%. That's 375,000, right?
That sounds about right.
Yeah. So did you panic? Did you feel sick to your stomach? Did you say this is a buying opportunity? Like, what was your emotional state of mind?
Most of the money was the timeline for when I needed that money was much greater than what was going to happen in the next 6 months.
So you just said this is long term. I'm not going to need it for a really long time, so it doesn't matter.
Right. So like right now, if you look at my portfolio, I look at the number and it really doesn't even seem real because it's not real. It's only real if you sell it. It's only real, so when the number goes down to what we talked about there, that doesn't seem real because I'm not selling it. And then on the same token, when the market's at its zenith, if you will, I look at that as kind of, it's not real, because it's just, it's a overreaction, or it's a sell-off, and it's eventually going to kind of seek an equilibrium, but it's not, at that point, it's not something that I say, I need the money tomorrow. If I needed the money tomorrow or in 6 months, I wouldn't be where, that money wouldn't be where it is. So a lot of that money that we lost a lot on, based on stock market and things like that, it wasn't money I needed right away.
So I just want to, tell you directly that, that type of thought process is very uncommon. Most people, when they log into American Century or Vanguard and they see the number getting smaller, they freak out and they take action to preserve capital, sometimes at the worst possible time. But you didn't. So, let's say the portfolio goes from 500 to 375 and you took no action and you theoretically bought more. And now it's 2006 and the market is up about, I want to say about 100% or more since the lows in 2003. So you made a lot of money. What was your thought process in 2006?
Well, by that time I had a house, so some of that money was still enough to do the down payment on the house, and I was looking at other things at that point. So the money that is now in IRAs, it's still in IRAs, and I didn't feel like I could touch that money even when it was going south, because I wouldn't.
Well, let me just jump in here. So you have retirement funds, but did you have non-retirement funds too?
Yes.
Okay, so what percentage was in what?
Well, I would say always 50% or greater in retirement funds. A certain percent, probably 25%, would be in the bonds for kids' college.
So it's safe to say you just maxed out your contributions every single year.
Oh, absolutely. Yeah.
Yeah.
Anything we could max out, that's what we were doing.
Okay, so let's go back again to 2006 and fast forward to the financial crisis, 2008. And this time the bear market is a lot worse. From top to bottom in the S&P 500, the market was down about 61%. And how much of a drawdown do you think you took from 2006 to 2008? What percentage were you down?
It didn't seem like a lot. It didn't seem like that much to me. Once again, because the money was for retirement, and that's still a few years away. It just, it was going down, but it wasn't anything that I felt like I could take action on, nor did I want to take action on. So, it might have gone down 30% for me, but at that point we had shifted. There was money. We kind of stopped investing in mutual funds at a certain point and started investing money in other things like the I bonds. We accumulate money.
So you went into fixed income a little bit.
Right,
yeah.
right. And then
so you're
CDs,
a little more diversified. CDs.
Yeah. It still were at that time not doing too bad, and then they fell off the cliff.
But you told me that at the bottom of the financial crisis, you kind of looked around and you said some of these stocks are trading at ridiculously cheap levels. Maybe I should get involved.
And I did. It would have been Ford, GE. There was one other. I can't remember exactly what it was, but I just felt like these things can't go any lower.
Well, GE got to about $6 a share.
I think that's what it was.
And Ford, I think, got to $2. Is that right?
I think it was. I think it was $2.50 or something like that.
Yeah. So, that you bought them pretty close to the low. What else did you buy? GE, Ford, do you remember anything else?
I can't remember. I always had Johnson & Johnson. That was a stock that I held for probably 20 years. But that other money that would go for Ford or GE, there was always still kind of some reason I was putting that money there. It was going to be for a boat, a future boat, or it was going to be for, it wasn't what I was going to pay for my house. It wasn't going to be kids' college. It wasn't going to be a retirement account. It was for, a travel account, or it was for, building an addition to the house, or it was for a future boat that I was going to buy. So
the GE example, I think, is particularly interesting because I mean, before we actually started, recording the podcast, we had a conversation about GE, and you said, it just seemed obvious to you that it wasn't going out of business. And it wasn't, I got to tell you, it wasn't obvious to me that it wasn't going out of business. I actually, in the Daily Dirt Nap at the time, I was, it was one of my best shorts. I think I started writing about it when it was like 10 or 12, and I said it was going lower. And, that fear in the financial crisis, anything that was financial related was going to zero. And I just think it's interesting because, I live in this world, this Wall Street world where, we were, panicked, and you're outside that world and you're like, yeah, it looks cheap to me.
Well, yeah, and especially because you're looking at GE financials and an aspect that I'm really not familiar with, and I'm thinking GE's building aircraft parts and nuclear power plants and toasters and refrigerators, and it's always been a blue chip stock. So how can they possibly go bankrupt? So to me, GE was too big to fail.
Well, in some sense, I'm right. In some sense, you're right. But in 2006, 2007, GE actually was primarily a finance company. It had become a finance company. And GE Capital it was the most important division at the company. And, that's really what people were focused on. Now, today, it's really more about, I don't know if you've read anything about GE today, but it's about like the Internet of Things and, they're.
Right.
So.
Well, also, too, the amount of money that I put into that stock, if it went to zero, it wasn't money I was going to cry over. So that's the other thing. It's like, certain amount of, like, if you go to Las Vegas.
Also, if GE goes to zero, we're all screwed anyway.
Right. I kind of looked at it like that. Yeah. But, the amount of money I would put in something like that, $5,000, $10,000, if I lost $5,000 or $10,000, well, there's times I have lost $5,000 or $10,000.
Okay, so let's just sort of summarize. Most people, when they take a drawdown of a certain amount, 10, 20, 30%, which you have done a couple times in your investing career, most people just panic and puke or do something stupid. So there's two possibilities here for investors, I think. If you're an individual investor, you have to do one of two things. One, always be invested and be willing to take an inhuman amount of pain and never sell. Or two, do something to manage that volatility. And, in my writings, what I tell people is that most people don't have the constitution that you have to take that financial pain. And so what I tell people to do is do something to manage the volatility. And part of that is diversification. Part of that is going into fixed income. Part of that is using active management instead of passive management, because a lot of actively managed funds have lower volatility than passively managed funds if you look for them. So what do you think about that?
I agree with everything you said. And it sounds a lot like a lot of the things that I had read, but quite honestly, passive on the mutual funds, at the time, I couldn't really do a lot of paying attention to some of those things. And I had to kind of trust the stories that I had read, that if you hold something for 30 years or 20 years, it's probably in the stock market going to be higher.
That's kind of the thing, is that I think the story that people are told about investing with passively managed mutual funds is you're holding this forever. But most people, they think they should hold it forever, but then they hold it. Then they should think long term, but they actually end up thinking short term, is what happens.
Yeah, I see that. I see that a lot. But for me, I was holding this for 20 years.
Yeah.
I'm holding this for 10 years. A lot of that was, if you're in the Coast Guard and you have 10 years in the Coast Guard and you think, well, the soonest I can retire is in 10 years from the Coast Guard before I have to do something else, you're going to hold something for 10 years because you don't really need it.
Now, did any of your mutual funds have sales charges or what is known as loads? Did you have any load mutual funds, or were they all no load?
They were all no load. That was one of the conditions whenever I bought a fund. I bought a no load mutual fund.
See, I actually have a theory about sales charges on mutual funds, and I actually think in some cases they can be helpful, because if you're paying a 2 or 3% load, let's say you invest $100,000 and you have to pay $3,000 right off the top. you're not going to want to sell out of that and buy something else or trade around it because you'll have to pay that sales charge again. So it encourages people, it encourages good behavior. It encourages people to stay in those investments. So it's almost like you pay this tax so you don't do anything stupid. Do you think that, what do you think about that? Or do you think fees are just bad no matter what?
I think fees are bad no matter what. But I understand your rationale. I certainly understand that. But for me, it was, okay, whatever I'm going to make as far as a return on investment, I certainly don't want somebody skimming or, taking some of that away from me at any point when I sell it, or, high annual fees, things like that. It just, to me, was going to reduce the amount of return I was going to ultimately get on the investment. So it's kind of like selling a house and going out and having a full service realtor, sell your house. That person's going to get a 6% commission, and they're entitled to that. That's what they do, and they're probably going to keep you from making a worse mistake. But still, when you sell your house and you think your house is worth a certain amount, and you get that, but then there's a 6% or whatever it is nowadays, 3%, whatever's being taken. I'm not smart enough to do a for sale by owner, but nonetheless, I would use a realtor. But you certainly want to go for the lowest commission that you can.
Well, speaking of do-it-yourself, have you ever had a financial advisor?
No. I talk to a lot of people. I see what other people that are doing that have been successful.
Do you ever see yourself wanting a financial advisor?
No, not at this point.
Pretend you had twice as much money or 3 times as much money.
I would, that changes the story. I would want that for tax purposes. I would want that for, putting it in a trust, somebody that really, really knows about estate planning. And
that's what happens. You get more money, you got more problems.
Right.
So
it's still not at that level, trust me.
Yeah. Do you have any debt? Is your house paid for?
The house is paid for. There's no debt.
There's no debt at all?
No debt.
How long did you have the mortgage before you paid it off?
7 years.
Yeah. So now a lot of, this is this thing that drives me up a wall, but a lot of people say, well, you shouldn't prepay your mortgage because you're getting a tax benefit.
It didn't seem to me like the tax benefit was that great. I would rather have paid down the debt. For me, it's like Yogi Berra. 90% of this is half mental. Even though I know most people have to get a mortgage, I wasn't going to be able to pay cash for my house. I got the highest down payment I could make and still, be able to do the other things to the house I wanted to do. But every month I owed somebody money, and it was Bank of America or Countrywide at the time, and it was just infuriating.
No, it's infuriating. Debt is terrible. Somebody else owns you.
Right.
Even if it's collateralized like a house. I have a mortgage. I bought a house 2 years ago, and I'm in a big hurry to pay down that mortgage.
Absolutely.
Yeah. Our old house in Conway, which you visited, we paid cash for that.
Right.
And so for 5 years, I didn't have a mortgage payment. That was the best thing in the world. And you got to admit, not having a payment is like the best thing in the world.
Well, and then quite honestly, the home you had was, you probably could have afforded more. And, there were people that told me I could have afforded more.
Yeah.
But did I really need that?
Well, you have a pretty nice house. I've seen your house.
Thanks.
So, do you at this point in your life? So I think you're about 10 years older than me. So you're about 53. Is that right?
Going to be the double nickel this year.
55. Okay. Do you have any financial goals at this point in your life? Is there something that you want to attain?
When I retire, I want to be able to travel with my wife. And I really don't want to be concerned about, if we take this trip, or if we don't take this trip, so, it's just financial freedom. And then, of course, you have to think about your health, too. You do have to think about long-term care and that kind of stuff. So,
well, what age do you want to retire? Do you want to retire soon?
I would probably say 5 to 10 years, I will be retired, but I may not fully ever be retired. It's just I kind of did a part-time thing once I retired from the Coast Guard for 2 years, and it drove me crazy. There's only so much Oprah you can watch. So, it's just I'm not the type of guy.
I'm like you.
I can't play golf every day. I can't go out on my boat every day. Anything I do, there are people that just that's what they live for, to retire and play golf every day. It would drive me crazy. So I would have to be doing some type of work. And I'll probably be that guy that will work as long as I can doing something. Now, it may not be full-time, but my father-in-law, he's like 75 years old, and he still works as a consultant and flies all over the United States, and it keeps him going. And I've seen other instances where somebody retires and they die a couple years later because they feel like they've lost their purpose.
I get it. So we talked a lot about your Coast Guard career. So just in a few sentences, whatever you're comfortable telling us, just tell us a little bit about what you do right now. What is the Cape Fear Public Utility? Is that right?
Yeah. It's one of the 16 critical infrastructure sectors, water, wastewater services. It's just like transportation or dams or electrical grid, those types of things. And I'm essentially a planner, but what I've done is taken my previous skills and applied it to a different sector. And I do a lot of security planning, emergency response planning, mostly getting ready for big hurricanes. So
we had the hurricane last year. That kept you busy for a while.
Yeah, absolutely. And then we had a big 3-county wholesale 48-inch line just blow out in the immediate aftermath of the storm. And so what you do is you plan for bad things to happen and how the people are going to need to be organized and mutual aid and assistance. And I also have a security component to the job where I'm worried about physical security and cybersecurity a lot more than a lot of things right now.
Yeah, that's everybody's concern.
Yeah.
All right, so let's get to the fun stuff. If you've listened to any of my past podcasts, we do a speed round.
Yes.
So the speed round, I'm going to give you a choice between two things, A or B, and you have to pick one. You can't punt. You have to pick one. So you ready?
I'm ready.
Okay. So chicken Kiev or chicken cordon bleu?
Hamsters. Chicken cordon bleu.
Hamsters is a Coast Guard or Navy term. I think it's the easiest thing for the cooks to cook. They just thaw them out and put them in the oven. This is another Coast Guard one, then we'll get out of the Coast Guard ones. Mid-watch or 4 to 8?
Mid-watch. I stood the mid-watch for 3 years consecutively. So I like it when you're at sea for any length of time staying the mid-watch. But if you have to stand the mid-watch and come into port early the next day, it sucks.
Oh, man. I'm a 4 to 8 guy. I never could sleep in with the late rack. I couldn't sleep in. People were waking me up. You know where that stateroom is, right? So I had the anti-gravity chamber.
Yeah.
Like you can't. They're doing small boat ops right outside the door. Like you just can't sleep. So I could not do. I had to do 4 to 8. I actually enjoyed. Getting up at 2:45, watching the sun come up.
Yeah,
I like that.
It's staying up all day afterwards. After you've gotten up at 3 o'clock in the morning to stay in your 4 o'clock watch. That's what I couldn't handle.
Bernie Sanders or Elizabeth Warren? You have to pick one.
That's my choice.
Pretend you're picking a president. Those are your only two choices. What is your choice?
Bernie Sanders, because he's so crazy that there's just no way anything that he wants is going to get done. With Pocahontas, it's scary because
she means business.
She means business.
Yeah. Chiefs or the Royals?
Royals.
There you go.
Royals. The Chiefs, I've been perennially disappointed since 1971.
Pat McCrory or Roy Cooper?
Pat McCrory.
Really?
Well, it's unfortunate with the HB2. He wanted to veto it. There were emails behind the scenes where he said this is an idiotic piece of legislation. His only downfall, and he would have been reelected, is if he had vetoed it and the legislation had overridden it. But because he signed it, they hung that albatross around his neck. He was good for the state.
You thought he was a good governor otherwise, especially economically, right?
He was a good governor, and that sunk his ship right there, that one issue.
Where would you rather live, Wrightsville Beach or Pawleys Island?
Probably Pawleys Island.
Really? Why's that?
I like South Carolina.
Yeah.
And Wrightsville Beach is, there ain't a whole lot going on in Wrightsville Beach, despite its, people like to go there and like to vacation, but they're kind of snooty once you get over the bridge. So you got to pay to park, and the water tastes terrible.
So I might stump you on this one. La La Land or Moonlight?
Didn't see either of them.
Yeah, that's what I figured. But La La Land is good. I haven't seen. I don't think anybody has seen Moonlight. I think maybe like 500 people in the whole country have seen it.
I like, movies with songs. I like Broadway.
You should see La La Land. It's really good.
I didn't see La La Land. No.
Emma Stone or Emma Watson?
I'm going to say Emma Stone only because I know who she is. I don't know.
You know who Emma Watson is?
I don't.
Did you see any of the Harry Potter movies?
Oh, wait, I'm sorry. Yeah, and the Belle, Beauty and the Beast, yeah, she's rocking. I would go to Emma Watson, even though that's probably going to get me in jail. Yeah. I always liked Hermione.
Two more here. Eddie Murphy or Richard Pryor?
Probably Eddie Murphy.
Yeah.
Richard Pryor was great. I mean, I liked Richard Pryor a lot. He was actually, I was a little young for most of his humor. I mean, at the time, he was really, really popular. I still wasn't as plugged into what he was doing as I was with Eddie Murphy.
And one last one. Who was better in Caddyshack, Ted Knight or Rodney Dangerfield?
Well, at the time, I probably would have said Rodney Dangerfield made that movie. But, Ted Knight was, when you look back at the acting and the character and things like that.
Oh, he was genius. It's definitely Ted Knight.
He was, yeah, I'd have to go with Ted Knight.
So that about does it for us. So if you had just a couple sentences, if you had any advice that you wanted to give to somebody starting out investing for the first time, what would it be?
Understand what it is you're investing in. I mean, so the Oracle of Omaha, he says, don't invest in anything you don't understand. And so you have to absolutely know what you're getting into, which keeps me from investing in a lot of things that somebody like you would invest in. But live below your means, save what you can, save as much as you can, and put it somewhere where it's going to do you some good.
Thanks a lot. So this concludes the 4th episode of the Monthly Dirtcast. Thanks to our guest, Eric Hatcher. Thanks to Blake Jarrell for letting me use his track Punta del Este. And if you want to learn more about the Daily Dirt Nap, go to www.dailydirtnap.com. That's www.dailydirtnap.com. You can also follow me on Twitter